Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
All right, my name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And friends, we do this each week right here, same time, same station. I am joined, as always, by my lovely producer, my sidekick, my number one, Jen, my producer. She's in the studio with me, and she is womanning the Anytime Hotline, running the board and watching for your emails. So, guys, you're in the right place if you've got questions and you want answers. We do our very best each week to give you the data, the tips, the tricks, the strategies, the answers that you need so you can go out there and make better real estate and mortgage decisions. And this week, even though it's Christmas Eve, is no exception. That's right. We are still doing the show. We're not taking time off. This is important stuff. We're happy to be with you. Man, oh man, thank you so much for spending a little bit of your Christmas Eve with us. If you're out running around doing some last minute shopping or just getting everything ready for the family this weekend. No matter what holiday that you celebrate, we are hopeful that it's with people that you love, that you're surrounded by joy. Give everybody a big hug and a kiss and just appreciate spending the holidays with them, because we appreciate spending the holidays with you. Hey, before we get into this week's show, I do want to brag on Jen a little bit. She rides a big, gigantic red Harley Davidson, and she leads a group of ladies who all ride. And each year they dress up in costume and they go to the assisted living facilities as well as some of the underprivileged children groups and give out gifts and candies and just put a ton of smiles on faces. There's nothing like seeing, 25 women all on their own Harley Davidsons dressed as Santa's helpers and elves and Frosty the Snowman. It's amazing. It's an amazing sight. But Jen, are you guys doing that ride after the show?
Yes, I'm going to ride. Flora and I will be all decked out and ready to ride.
All right. And for those of you who don't know, Flora is her red Harley Davidson. And last year, she put the reindeer outfit on it. So it had the... what do you call it? The antlers and the big red nose and the tail on the bike. So super excited. I can't wait to see that. I'm excited to be a part of it. I'm going to be trailing behind them in the Mr. Mortgage Mobile with it full of gifts so we can hand out some gifts at the assisted living facility. So that's what we're doing when we get off the air. I hope you guys have some fun stuff planned too. But anyway, you heard me mention your questions. If you have questions, you can call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline, and Jen is standing by. She'll get your questions on the air. Remember, you can always text that number too, 855-462-7292. If you prefer to send us an email, check out MrMortgageRadio.com. That's MrMortgageRadio.com. And I believe on the bottom of the page, there's an email button there. If you just click that, you can type your question in, hit submit, and Jen will read it on the air for you. But man, oh man, even though it was a holiday week, there was still a lot of excitement around real estate mortgages. I mean, it's the gift that just keeps on giving, right? All of the doom and gloom news out there. But hey guys, if you listened last week, you heard my cautious optimism regarding the CPI number and all of the people that were flooding the airwaves saying, ding dong, the witch is dead. Remember I referenced the horror movie where, you think the bad guy's dead, and then you look in the background when all of the kids are, catching their breath and celebrating that they killed Jason or Freddy or whoever the bad guy is, and then you see him stand up in the background and start marching towards the camera again. Well, that's what happened this week, and I kind of felt like that it was going to happen because it was interesting, right? The 7.1 number came out last week, and everybody said, inflation's cooler than we expected. This means the Fed is going to start to ease back on rates. And then sure enough, the next day he raised rates only a half a basis point, 50 basis points rather. And all of a sudden, everybody's dancing in the street. This means we've tamed inflation and we're going to see lower rates moving forward. And then Chair Powell said, no, not in my house. Remember that Dikembe Mutombo commercial, not in my house. Yeah, he said, no, we're going to continue to raise rates. Our target is still 2% inflation. And that the reality set in based on those comments, and we saw rates go back up to where they were announcement last week. So no harm done. We made up some ground on the news of the cooler than anticipated inflation, and we saw a slight little dip in rates, but then the next day after those comments were made, we saw them go right back to where they were. And that's always my fear, guys. Don't ever hang your hat on one report. Rates, the economy, life moves in waves, right? I don't know how many of you are in a coastal town, but I was born and raised down in Florida, grew up on the beach, and you can sit on the beach and watch the tide come up. It doesn't just go from low tide, boom, to high tide. A wave comes up, and then it goes back down. And then in the case of high tide, the next wave comes up a little bit more, and then it goes down a little bit less. And that gradual increase, decrease is that step up pattern in the interest rate environment, in a stock price, in cryptocurrency, whatever it is. Nothing ever moves in a straight line from low to high. And that was what concerned me last week when I saw everybody with that's an overstatement. Not everybody, but a lot of people in my space, the real estate and mortgage space, with a cell phone camera suddenly saying, this means that we're going into a lower interest rate environment. And guys, I do believe rates are going to come back down. I just don't think they're going to come back down to the 4s and the 3s and the 2s and the 1s. I think we're going to settle somewhere, 5.5, 6, 6.25, and we're kind of there now. This is starting to feel normal. We're seeing interest rates, depending on the loan program and the fee structure, anywhere between, the high 5s to mid 6s. And the buy down options are out there, guys. We're still seeing that buy down strategy employed often, where buyers are using seller contributions to buy the rate down. And if you're starting at a rate of 6.25 and you can buy it down to 5.25, man, oh man, that's a fantastic rate that you may not have to touch in the future. So still a lot of opportunity out there. This week's news was a little bit muted because of the short week. Builder sentiment is still down. Part of it's seasonal, right? Snow on the ground in a lot of the country, so building slows. But I find it interesting that the supply and demand equation is still at work. There's still not a lot of supply in the market, albeit there is more supply than there was last year. Home sales are cooling. We're still seeing appreciation in most of the markets that we're in. There's still opportunity out there. A lot of exciting new loan programs. There's a 100% FHA. Actually, it's an FHA loan with a down payment assistance, a forgivable second, if you will, of 3.5%. That's available for first-time buyers to get them up to that 100% loan. And the seller can contribute up to 6% of the sales price. So really, that's almost a no money out of pocket in given scenarios for buyers. So there's some exciting stuff out there. I know it's frustrating, but I know people that are still out there waiting. And, the reality is there'll always be those people that have an excuse. And there'll always be those people who are saying the market's going to crash, the market's going to crash. If you say anything long enough, you're going to be right. But if you've listened to the show for any period of time, you know that I've got clients since the late 90s. I've been in the business, and I've seen clients own real estate in up markets, down markets, high rates, low rates, and oftentimes it makes sense. So, I'm a positive voice on ownership. I don't see the value in renting unless it's far cheaper than owning, and you can deploy that savings in other investments. But I've just been around too long to see what equity does for people later in life. It gives them the opportunity to move up. It gives them the opportunity to pay for unexpected medical expenses, to seize opportunity by cashing out some equity. But more importantly, the house is building an equity position that can help them later in life. So I'm always going to be a fan of ownership. But I'm going to leave that right there. You hear the music. You know what that means. That's my cue. We'll be back in a few. Sit tight. On the other side of this break, we're going to dive into a little more data, and we're going to start taking your questions. And you can get your questions on the air right now by calling 855-462-7292. Call or text 855-462-7292. Sit tight. We'll be right back. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. I want to tell you a quick story of a client of mine in Port St. Lucie, Mr. D. Awesome guy. Did everything right. Worked hard, provided well for he and his family, had a nice chunk of equity, was retired and living comfortably on his fixed income. That was until all of this crazy inflation. Gas prices, grocery prices, medical bills. Every time he turned around, he was getting hit with another unforeseen expense. The good news is he has a ton of equity, so we helped him with a reverse mortgage. He was able to take a nice chunk of money at closing and has access to additional equity through a credit line. And the best part, never another monthly mortgage payment. Now listen, a reverse mortgage is not for everyone, but for the right person, it can be life-changing. If you'd like to learn more, find us online at mrmortgageradio.com. That's mrmortgageradio.com. Or give us a call at 855-462-7292. My name is Mark Eitel, NMLS 1929005.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And I'm laughing because I just ran out to grab a bottle of water, and I ran back in here and almost missed my chair as I was sliding my headphones back on. So I'm glad the mic was muted because that was a near disaster, and you would have heard me dropping the F-bomb as I was falling out of my chair. But anyway, guys, thank you so much for spending a little bit of your day with us. As always, it's our goal to bring you the information that you need so you can make better real estate and mortgage decisions for you and your family. And you know, I say it all the time, your questions are my favorite part of the show. And I know Jen just tipped me off that we've got some questions over there. So let me throw it over to Jen and we'll dive right into your questions. Hey, Jen, what do we have question-wise?
Ron is asking, I currently don't work, but I have plenty of money in the bank. I can pay cash for a house, but prefer a mortgage. Are there any loans for this scenario? I have excellent credit. Thank you.
Hey, Ron. Great question, my man. And congratulations on having a big old mound of money in the bank and not having to work. But I'm sure you worked hard for it your whole life, and now you're just enjoying your time. So anyway, brilliant question. And yes, there are loan programs for that exact scenario. So there's a couple of programs that jump into mind, and both of them are no ratio programs. And how they work is if you've got the cash in the bank to put typically 20% down payment, and then the remaining money in the bank is enough for you to get through the next 24 months. So that you'll hear the term reserves. What reserves means is the cash on hand reserved for making the payment. So if you've got enough money to get through 24 months, typically the down payment plus 24 months reserves and you're good to go, especially if you mentioned you've got good credit. So the credit score for that program typically goes 620, 640, somewhere in there, depending on the lender and depending on the program. So that is the first thing that jumps into my mind is the no ratio program. And a spinoff of that is there's an acronym, ability to pay in full. And that's a variation of the no ratio program where you're just verifying that you've got the cash, you could pay cash. And in that case, there's little risk to the lender because they see your ability to pay for the loan if you had to. So great question. And we see a lot of that in the case of recently divorced couples. And historically, it's been the wife who is the stay-at-home mom. Although we're seeing this change, but I'm just saying historically that those have been kind of the traditional roles. And she may be at home for 15 or 20 years, raising the children, running the household, which is, we all know, CEO level stuff right there. But oftentimes that one spouse who was tasked with all of the management of the home didn't have a quote unquote job. And upon divorce, there might be a nice lump sum settlement. So we see that program often where the one spouse receives that large settlement, if you will. So they've got the cash, they just don't have the work history, and we're using the no ratio or the ability to pay in full programs to get him or her into their new primary residence and on with their life. So brilliant question. We see it often enough to know that those programs can make a huge difference. So I appreciate that, Ron. Hey, Jen, do we have another question over there?
Ernesto sent this one. Do all first-time buyer mortgages have mortgage insurance?
Wow. Hey, that's another great question. And I don't think mortgage insurance gets explained often enough or well enough. So I'm going to dive into that real quick. And Ernesto, the mortgage insurance isn't required for first-time buyers. It's required for anybody who borrows more than 80% of the purchase price. So historically, lenders have established that they have a comfort level with the risk at 80% or less. So let's use a very, very round number. And I know this property does not exist out there today anywhere but maybe Fantasyland. So let's say there's a new listing in Fantasyland right on Unicorn Lake behind, Rainbow Mountain, and you can buy that property for $100,000. Now, the lender is comfortable loaning you $80,000 because they assume that if they have to go into foreclosure, that additional $20,000 in equity will pay for all of the associated costs and the back interest to get their money back in a foreclosure. So historically, 80% has been that, that safe area, if you will. Mortgage insurance is required when you borrow more than 80% because now the lender is extending beyond their comfort level with risk. So if you borrow 90%, 95%, 97%, the mortgage insurance is required on the amount above the 80. So in the case of a 95% loan, the mortgage insurance insures the lender on that $15,000. So regardless of first-time buyer or if you've owned 90 homes, 100 homes prior to this, if you borrow more than 80%, that mortgage insurance is required. Now, oftentimes, first-time buyers are borrowing more than 80%. So that's where that connotation, that's where that correlation is made, where often you'll hear people assume that first-time buyer is required to carry mortgage insurance. But I hope that helps. I think that's a brilliant question. In the old days, to get around mortgage insurance, you saw people taking a first mortgage of 80% and then a second mortgage. And this is starting to come back in fashion a little bit right now. A second mortgage of, say, 15%. So you've got a first mortgage of 80 and a second mortgage at closing of 15%, which is getting you to 95% loan to value is the term that we use, but you're not required to carry mortgage insurance. Now, interestingly enough, the second mortgage always has a higher interest rate than the first mortgage, but the interesting part is blending that payment together is still a savings in some cases monthly than just paying that mortgage insurance. But one interesting thing about mortgage insurance is, with the exception of FHA, if you pay that balance down over time or the property appreciates over time to where the outstanding loan amount is now 78% or less. I know I said 80, but that's the threshold for a purchase mortgage. But once you reach 78% or less of the value with your outstanding mortgage balance, you can ask for that mortgage insurance to be dropped because it's only protecting them on that amount over the 80%, or in this case, 78. So getting it dropped over time, you're going to hit that 78% loan to value. Purchasing the property, they're looking at 80% loan to value. So I hope that helps, but that's a brilliant question. And I know sometimes it feels like you're insured against everything when you buy a house. You've got title insurance, flood insurance, homeowner's insurance, mortgage insurance, insurance upon insurance. But anyway, thanks for that question. You hear the music. You know what that means. That's my cue. We'll be back in a few. Sit tight. On the other side of this break, we'll be back with more of the show.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
me tell you a little story about a man named Jed. Well, actually, this is a story about Mary, not Jed. Mary is an awesome single mom who's been raising her daughter in the same one-bedroom apartment for the last 11 years. That's right, one bedroom. They've got bunk beds in there and they've made the best of it. Her daughter's now a teenager, getting ready to start high school. The bedroom is a challenge, but more importantly, sharing that one bath is getting tough. So she decided to take the plunge and become a homeowner. We got her approved with an FHA loan. That's right, I said it, FHA loan. If your agent's telling you that FHA or VA loans are not being accepted right now, you're talking to the wrong agent. Give me a call and I'll get you in touch with a really great agent. Back to the story. She took the plunge and she is now the proud homeowner. They each have their own bedroom and more importantly, their own bathroom. Super excited for Mary and her daughter. If you want to learn more, check us out online at MrMortgageRadio.com. That's MrMortgageRadio.com or call us at 855-462-7292. My name is Mark Eitel, NMLS 1929005.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show right here on this beautiful Christmas Eve morning. And I say beautiful because I'm hoping you're surrounded by those that you love. And guys, thank you so much for spending a little bit of this day with us. We truly, truly are blessed. We've received so many gifts of support, of opportunity. When I say gifts, I mean just your participation. It's been awesome. We've already started off with some great questions this week, and it seems like each week we're able to help more and more families with their mortgage needs. If you're wondering if we could help you, guys, if you hear my voice, we can be your choice. We're coming to you in the markets that we serve. So I know we're adding new radio stations almost weekly, and we're expanding the Mr. Mortgage team nationwide. So super, super excited to be with you. We greatly appreciate your time. We honor your time. We're going to do our best to answer all your questions. And I promised Jen I would sing a little Christmas carol for her. Actually, I don't know if she's going to treat this as a gift or not. Are you ready? Feliz Navidad, do, 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 do. Feliz Navidad, dun, 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 dun. Feliz.
Oh, Mark.
I'm sorry. I can't go any further because I can't sing the Spanish part. I'm terrible. Viejo gringo aquí. But I just want to say Merry Christmas to everybody. Happy holidays, happy Hanukkah, whatever you celebrate. I'm hoping that it's an amazing holiday season for you. It's an amazing holiday season for Jen and I. We greatly, greatly enjoy doing this, and we appreciate all your questions. We've had some great questions so far. I know we talked to Ernesto about mortgage insurance, which doesn't sound exciting, but it is something that most people misunderstand. And then Ron was asking us, how does somebody who has a ton of money but no job qualify for a mortgage? And we touched on some of the no ratio products. But let me throw it over to Jen, and we will keep your questions coming. What do we have, Jen?
Susie, we're looking at a house that is in foreclosure. Is there any way we can take over the seller's mortgage? How does that work?
Okay. Hey, Susie, great question. There's a couple things that come to mind. One is assuming a mortgage means you are going through the qualification process with the servicer of the current mortgage. And the servicer is the company that collects the payments, not the original lender, not the original mortgage broker, but whoever collects the payments is where you start on an assumption. And that's true whether the property's in foreclosure or not. Sometimes someone will have an amazing interest rate and you just want to buy the property and you want to assume that mortgage. That's how that works. You're going to start the process with the servicer. They're going to qualify you for the mortgage, and then you assume the exact term and the exact balance. So if they owe $80,000, to use the same Fantasyland property that Ernesto and I were talking about a minute ago, and it's worth $100, that means you're going to come up with the $20,000 and assume the $80,000 mortgage. And that's where a lot of people get tripped up, because in today's housing market, there's still a ton of equity out there. So you do need to buy out that equity position to assume the mortgage. The other thing that jumps into my mind, and you hear a lot about this, it's an exciting opportunity if you're a quote unquote investor, but there's a lot of risk to the seller. In this case, if they're already in foreclosure, there's not, they've already damaged their credit, but people will buy a property subject to the mortgage, which means if I'm buying your property subject to the mortgage, you're going to deed the property over to me, and I'm going to promise to make your mortgage payment. Now, here's the thing. You're still on the hook for the mortgage. If I stop making the mortgage payment and the house goes into foreclosure, guess who's in foreclosure? You. Guess whose credit is getting nicked up? You. So subject to, I'm not a fan of if you're a seller. And one other thing a lot of people don't realize is almost every residential mortgage has a due on sale clause in the mortgage, which means once ownership transfers, the lender could call that note due and payable in full because the original borrower is no longer the owner. And they don't know who I am. I'm just some guy who said, hey, let me buy your house subject to the mortgage, and I talked you into this opportunity, and maybe I gave you a big lump sum of money to do it, and you think everything's great, but there's risk in that equation. So is one thing, assumption is the other. Assumption puts the mortgage in the name of the buyer, and then the seller is no longer associated with that loan. There's no risk if it goes into foreclosure and you assume the loan, then you're the one on the hook. So hopefully that answers the question. There are a few caveats around that. Assuming a VA loan is a completely different animal. It may tie up the entitlement of the veteran, so that requires a much, much deeper conversation. And guys, if anybody's out there in this circumstance and you want to dive deeper, just give me a call, 855-462-7292, 855-462-7292, or check out MrMortgageRadio.com. All my contact information's there. Actually, there's a lot of good stuff there. The podcast, the Facebook page, websites, a lot of good stuff. But hey, Jen, do we have time for another question?
Tom has this question. Can I buy an investment property with my existing equity line? I'm not sure if there are any rules against this. Thank you.
Hey, Tom, that's a brilliant question, my man. And yes, you can. So once you get that equity line, you can go to Vegas if you want with it. You can buy additional real estate with it. Where it becomes a bit of a challenge is if your intent is to buy a new primary residence and make your current primary residence a rental property. Oftentimes, there is language in the equity line note that requires it to be paid if that's no longer your primary residence. Because in the hierarchy of risk, from a mortgage lender's perspective, the safest bet is on somebody's primary residence because you're likely to hold on to that one until the last minute. So just know that if your intent is to buy a second property and ultimately make that your primary, you're going to have to either, sell your current or have a strategy in place that pays off your equity line. But if you're going to buy an investment property, there's no limitations that I know of. I mean, I know people who have done equity lines to buy all kinds of foolish things. So buying an investment property is probably a good idea as far as using that capital. Hey, brilliant question. I appreciate that. Let me throw it over to Jen and see if we can squeeze in another one.
Angela is asking, I'm a little confused. Last week, everyone was talking about rates coming down because inflation is going down, but they seem to be up since then. What am I missing?
Hey, you're not missing anything except maybe the opening segment of the show, because I touched exactly on that. And that was my caution to everybody last week. If you missed last week's show and you missed my Nostradamus moment, go to MrMortgageRadio.com and check it out. And I'm not saying I'm the smartest guy in the room. I'm just saying never hang your hat on one report. And we talked about that. There was a lot of optimism when the inflation rate came in lower than anticipated. But guys, 7.1% is still ridiculously high. I think I used the analogy last week. It's like we're on top of a 20-story building and now we're looking out the window of the 18th or 19th floor. yeah, we're lower than we were last month, but we're still way, way up there. And if you're afraid of heights, from inflation standpoint, we all are afraid of heights. Don't look out the window because it's a long way down. So no, you didn't miss anything. What you did the same thing we all did. You saw everybody out there being overly optimistic without having data to support it. And the Federal Reserve basically said, guys, we're going to keep raising rates. They're slowing the pace of the increases because they're trying to let what they've done filter through the economy, because all of those lagging indicators are just that. They're looking backwards. They're trying to drive the car looking in the rearview mirror, and that's never, ever easy to do. But brilliant question. I hope that helps. I'm open to a conversation with anybody about that. If you want to deep dive it, just give me a call, 855-462-7292, 855-462-7292. But you hear the music? That's my cue. We'll be back in a few. Sit tight. On the other side of this break, we'll be back with more of your questions and more of the data.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant files our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
So you think interest rates have gotten too high to refi? Well, not so fast. There are several reasons people refinance. One is to lower their rate, that's for sure. But there are many, many other reasons. Debt consolidation, unexpected medical bills, home renovation. I even know of one guy who refinanced his house so he could buy his mistress a condo. But let's get back to debt consolidation for a minute. I'm working with a client now. His name is Ben. He's in Palm City. And Ben is going to refinance, pull some cash out, pay off 2 truck payments, as well as a host of credit cards. He's going to use a loan program called the REC Refi to reduce, eliminate, and consolidate his debt. So yes, his mortgage interest rate is going to go up a bit, but he's going to reduce his monthly expenses significantly. So if you'd like to learn more, you can find us online at Mr. Mortgage Radio. That's MrMortgageRadio.com. Or call us at 855-462-7292. My name is Mark Eitel, NMLS 1929005. You can find us online at Mr. Mortgage Radio. That's MrMortgageRadio.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we're back. My name is Burgermeister, Meisterburger. Who remembers that? I just saw that one the other night. We're obviously it's Christmas Eve, and we've watched all the holiday specials and the old Christmas shows over the last week, and that one still holds up as far as I'm concerned. That Burgermeister, Meisterburger makes me laugh every time. But anyway, guys, my name is not Burgermeister, Meisterburger. My name is Mark Eitel, and this is the Mr. Mortgage Show. And Jen and I do this each week right here, same time, same station. We are very, very honored that you're spending a bit of your day with us. Thank you so much for tuning in, even on Christmas Eve. I hope you have us on while you're getting ready for the festivities this weekend. And man, I hope everybody's having an amazing holiday season and spending it with those that you love, no matter what holiday you celebrate. It's a great time just to reflect and give everybody a big hug and a kiss and, do good things in your community. We're big, big proponents of that. And thank you for supporting us with your questions. Thank you for giving us the opportunity to serve so many of you and your families with your mortgage needs. We are truly honored to be a part of your journey. So super, super excited. And I'm getting a little sappy, so I'm going to back away from the sap tree and throw it over to Jen for another question, because I know she's got some teed up. Hey, Jen, what do we have over there?
Bert is asking, thanks for all the information about reverse mortgages. I've been talking with your office, and I think we're ready to apply. I'm a little concerned that we won't qualify because we only have our Social Security. Do you think we have a chance?
Hey, Bert. Yes, I want to encourage you to continue the process because you would be surprised how often reverse mortgages are approved with very, very little Social Security or pension income because it's designed to generate income. You can receive a monthly payment each month. So assuming that you don't have, a bunch of car payments, credit card debts, and you've got the necessary equity in the property, I would encourage you to just continue with the process and let's take a look at how much equity that you have in the property. Let's take a look at what the Social Security income actually is, and we can do the calculation for you. And there's no obligation and no expenses going through the process until you need to get your counseling certificate. And guys, if you don't know that, the reverse mortgage requires you to go through a counseling session. It takes, somewhere between 1 and 2 hours, depending on how many questions you have. It's done over the phone. The fee, you pick the counselor, your reverse mortgage lender. I'm hoping it's us, but the lender will give you a list of approved counselors and you just pick one. It's usually somewhere around $150. Could be a little more, could be a little less. I've seen some variation. And they walk you through the good, the bad, the ugly, start to finish, and then you can ask them any questions you want. And it's intended to be a disinterested third party for a reason, so that a salesman isn't answering your questions because, guys, the reverse mortgage isn't for everybody, and they were abused in the past. So this is key that you get all of your questions answered. And we actually advise people not to get the mortgage sometimes because it doesn't make sense for their personal scenario, and that counselor can reinforce that to make sure it makes sense for you. But that's the first time that there's anything out of pocket. And then the second time is the appraisal. And sadly, there's nothing we can do about that. You have to pay for the appraisal directly because they don't want the lenders to influence the appraiser. But yeah, you can dig right in. We can do the full proposal package for you, and you can get a very, very good idea of how much you can receive each month. As a matter of fact, guys, if anybody out there has questions, go to moreaboutreverse.com. That's moreaboutreverse.com. And there's a little explainer video. And be gentle because that's me. I'm not as good looking in person as I sound on the radio. Maybe I don't sound good looking on the radio. That was an assumption. But that's me in front of the camera, and I'm awkward on video. But I do my best to answer some of the common misconceptions. And there's a little box where you can request more information. And we'll send you the packet, and you can dig in just like Bert is and shoot us back any questions you have. But Bert, I would encourage you because oftentimes the income generated from the reverse mortgage is enough to qualify. But there's a lot of assumptions being made there. We got to look at your credit, and we've got to look at what your outstanding debt is. Because if you got a load of debt and no income, it might not work. But I'd welcome the opportunity to at least dig in and take a look. But I appreciate that question. Hey, Jen, do we have anything else? Okay, what do we have?
Joelle is asking, what is the minimum credit score for a first-time buyer loan? Thanks. You guys are awesome. You're awesome too, Joelle.
You are awesome. Jen's awesome. I'm going to try to be awesome with this answer, but hey, thanks for that. So that's an interesting question because there are a few legs to a table, right? And I use this analogy sometimes, a mortgage, or let's use the example of a stool, right? A four-legged stool in the form of a mortgage. A four-legged mortgage has credit, income, assets, which are cash in the bank or other reserves, and the property. That's the fourth leg. So a four-legged stool is very stable, but a three-legged stool will also stand, and you can sit on a three-legged stool. It's not as stable, but where I'm going with this is if the credit leg is suffering, but you've got plenty of income and a load of assets and you can put a bigger down payment down, then you can get approved because technically you can go all the way down to a 500, although the lowest credit score that we have gotten approved is a 540. But I say that because a lot of people have a score higher than a 540 credit score. Oftentimes with the lower credit scores, it's not so much the score, it's what's pulling that score down. Is there foreclosure activity on the credit report? There's a lot more I would need to know. But to answer your question, the FHA guidelines, which FHA is not only for first-time home buyers, but it's a popular program with the first-time buyers for a load of reasons, which I won't dive into on the show because it's a long. You know what I'll do? I'll post some bonus content to the podcast. I'll do a daily dose about FHA and why it makes sense for a lot of first-time buyers. So give me a few days. We're in the middle of the holidays, but go to MrMortgageRadio.com. And actually, there's a lot of FHA content already there in the podcast, but go to MrMortgageRadio.com, hit that top link, and you'll land on the podcast page, and you can search. I think there's almost 100 episodes up there already. But anyway, I'll deep dive FHA for you if you'd like to be able to go a little bit deeper with it. But to answer your question, technically as low as 500, although my personal experience, I've not been successful lower than 540. But I mention that because oftentimes it's not just the score, it's whatever else is on there. But here's the thing. Let's have a conversation. I'd love it to be with my team, but if it's not, have a conversation with somebody that you're comfortable with and let them get a look at your credit and just let you know what's possible, because oftentimes there's a way to make it work, whether it's a no ratio loan, whether it's bank statement loan, whether it's having your cousin buy the property and lease optioning it to you and they can use a DSCR loan. There's a lot of ways to make something happen if the willingness is there, the ability to repay the debt, and the assets necessary. Think of that three-legged stool. If you've got 3 of those 4 legs, it might work for you. So great question. I want to encourage you to at least explore the opportunity. Don't shortchange yourself, because you might be surprised. There are loan programs for almost any circumstance. I mean, you need to have some income or assets. You need to have credit and income. You can have credit and assets. There's a lot of ways around it. Heck, we talked about that in the very opening segment of the show. Ron asked a question. He's got great credit, no job, but a load of assets. Yes, there's a program for that. That reminds me, remember the old Apple commercials? There's an app for that. There's an app for that. So yeah, there's a program for that. It comes down to, are there circumstances that make sense? In the case of no income verification, do you have the assets? In the case of, great credit, you don't need a lot of assets, but you do need income. So, or in the case of Ron, he had great credit and a load of assets, so he didn't need income. So I hope that makes sense. I encourage everybody to explore the opportunity. Our goal is always to say yes. If we can't say yes, we never say no. We just say not now, and then we give you the plan and the strategy to get you to a yes. I think everybody should kind of operate under that assumption, because homeownership is that important. It's not supposed to be easy, but it's that important. So I appreciate the question. We've had a lot of great questions. Oh man, you hear the music. You know what that means? My time is drawing near. Wow, that was fast. Where did the time go? I guess we're off for a motorcycle ride and then some eggnog and a big dinner, and then tomorrow some presents. But hey, text me and let me know. Is it big Christmas Eve dinner for you or big Christmas dinner? Because we do both, and my waistline proves it. But anyway, the music means we're wrapping up. Hey, say bye, Jen.
Goodbye, Jen. Have a great week.
Have a great week, everybody. Jen and I will be back here next week, same time, same station. If you need us during the week, check out MrMortgageRadio.com. That's MrMortgageRadio.com. See you next week.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.